What is going on YouTube? It's Sankey. We're back with another one. Alright guys, so let's take a look at the portfolio. So as you can see, we're starting to make our recovery now. You guys know I like to be transparent with you. That's why I showed you that portfolio yesterday when it came down heavy in the markets. But I've been through market volatility before and I know how this plays out. It's only a matter of time before we make a full recovery back to where we're at before, and it's onwards and upwards from there. So I want you guys to take note of this to see how we remain composed and we don't panic sell when we have sell-offs in the market. Alright guys, so as we know, stock market remains volatile right now, and this is partly caused by money transitioning out of the tech sector and also expectation the inflation rate might rise. But as I've always said to you guys, this presents an opportunity for us and I'm excited by it because I do think if we stick to that strategy, long term we're all going to benefit massively from it, especially if you guys have been catching the dips in the plays I've been throwing your way. Not only that does it present good buying opportunities, but it also gives us an opportunity to reevaluate and adjust our portfolios. Now, along our journey to hitting success in the stock market, from time to time, we're going to have to review our portfolios, reevaluate, and adjust the structure of it. Now, if all of your portfolio profits have been wiped out over the last few days, and some of you, even if you dropped into a negative balance, it's time to review your portfolios. So we're going to add a couple of plays to it to give you that diversification and that risk protection to ensure you're okay next time we meet headwinds in the stock market. That being said, I've got a couple of plays to put on your radar. So I've got a jam-packed one for you, so do make sure you watch this one all the way through for me. Now, before I get into it, I'm going to need you guys to hit that like button for me. And if you're new, hit that subscribe button, join the journey. Let's jump into our first one. Up on screen, you have Walt Disney. That's ticker symbol DIS. Now, if we look at the charts, we can see very good performance on the week on this play. Great performance on the month of around 15%. And guys, that's because we're seeing that transition, that shift from investors taking money out of big tech companies and putting them into pandemic recovery plays like Walt Disney. Now, when I do my portfolio review sessions with you guys, I'm always spotting areas we can tweak, make improvements. And one of the areas is by adding these pandemic recovery plays to the portfolio, because not only do they present good upside when things clear, but also they give you that diversification and they reduce your risk in case we next meet headwinds in the stock market. Now, I've got to remember, Walt Disney, they have their streaming platform, and this is a big part of their business that's doing very well. It's carrying their business right now. They have 95 million subscribers on there, and this is up 10% from when they last reported in December, so it's flying. And you guys know I'm big on streaming companies, like we have Roku in the portfolio doing great things also. And this is because we're seeing a continual shift in the way that we consume content, moving towards streaming, and this is set to continue as we move forward. This is because it's convenient. You can watch what you want, where you want, whether that's on the train to work or on the bus to school. Not only that, it's personalized. You get that personalized experience because you get suggestions thrown out at you. Also, it's affordable. The Disney platform, that costs around $5-6 a month. Now, you got to remember, their theme parks, cruise ships, movie studios remain closed for now. So what once used to be a big part of their business, big revenue driver for them, is now operating at a minimum. But this just acts as a good catalyst to push that stock price along once everything is opened up again. And in their last quarter, they received around half the amount of revenues from their theme park that they did the year previously. That's around $5 billion that they're leaving on the table, which should flow back into the business once everything is opened up again. Next up, we have JetBlue, ticker symbol JBLU. Now, I'm going to put some airline plays on your radar because they're starting to pick up some momentum now. So as you can see on the week's performance, strong. On the month, great performance. Now, the last time we spoke about airlines was back at the start of the year, and I said make sure you have these recovery plays built into your portfolio. So if you haven't done so already, I want to make sure you guys pick up at least one airline play and put them in the portfolio. There's a lot you can choose from. We've got Delta, we've got American Airlines, and of course we've got JetBlue. Now, I'm going to put on your radar that JetBlue has struck up a partnership with American Airlines to increase the number of destinations that they cater for. Now, I like those businesses that are forward thinking and prep themselves ahead of time. Now, with a lot of entertainment facilities closed, households now have a higher savings rate and a lot of pent-up demand and eagerness for travel. So once these airlines start opening their doors for international travel, you're going to start to see them make a lot of revenue, and the investors are going to notice this and push that stock price up higher. And I expect a lot of these airlines are going to reach all-time highs in their stock price. I expect JetBlue to pass $30, so there's still a lot of money to be made with these airline plays. Up on screen, Bank of America, ticker symbol BAC. Now, what you guys need to ensure is that you've got some banking plays in the portfolio that increases your diversification, reduces your risk, and this one will grow steady for you over time. Now, this is one of the strongest banks out there. They invest heavily into their technology, and I expect them to continue growing for us as we move forward. Now, on a put on your radar that Bank of America is sitting on a lot of cash right now. There's a couple of things a business can do when it's sitting on cash like that. It can pay dividends, it can reinvest into the business, or it could do share buybacks. And if it does share buybacks, that's going to increase that stock price. Now, the CEO has come out and announced that once restrictions allow so, once regulations allow for it, there's plans to do share buybacks. So this is going to give them an additional push to get this share price from a mid $30 play up into the 40s. Alright guys, Barocca with the channel, you know what time it is. This question comes from Sergio, says, thank you for all your work that you share with us. Can you please give me advice on how to start investing with a low budget? My budget is £300 and I can add £100 monthly. Should I invest in 3 plays or maybe more, and in what kind of plays? Now, this is a great question and you touched on some good things I want to talk about. Firstly, you said you're a new investor. It's always good to have new investors jumping into the stock market. I always say the best time to start is right now if you haven't done so already, because what happens is over time your returns compound. You also mentioned you're looking to add £100 to your portfolio every month. This is good to hear, because when I talk about the blueprint, I say invest into the right place, I say invest consistently and exercise some patience. So it's good to see you've already got the mindset to get you going. Now, this is something I've mentioned before. If you haven't done so already, try and set aside an amount each month to invest into the stock market. That's 1, into your existing plays. You're going to catch the dip, get in at a good entry point. And 2, that's new plays that you add to the portfolio. And in doing so, you're going to build out your portfolio and your returns are going to grow. Now, let's talk about diversification. So you mentioned, should you invest into 3 plays? I would say keep the amount of plays in your portfolio low when you're starting off. This is going to allow you to get on top of things and manage the portfolio better. So a good amount to start is around 5 plays. That way you can invest into different industries. So you can grab one play from EV, you can grab another from financials, another gaming, clean energy, and so on. And then finally, you mentioned what type of plays should you invest in. Now, I would stick to those growth plays. They're still going to generate you good returns over time, but that risk-reward balance is better. Now, with the penny stock plays, again, as you build up your experience, you can jump into those too. But what I would do is I'd keep more of the portfolio in those growth plays compared to the penny stock plays. The penny stock plays, they're going to be volatile, they're going to be risky, right? You might have some losses in there, so make sure you build your foundation of your portfolio upon those growth plays. Alright guys, that wraps things up. Now, as we progress through the rest of the week, I'll be checking in with you guys to ensure that we're making the most of the market opportunities. So do hit that like button, hit that subscribe button, and I'll catch you on the next one.